Hey everyone, welcome back to the channel. I'm Mike, the Mortgage Jedi, and today we're diving into one of the most common questions out there. Aren't all mortgages the same? Well, you're almost right. About 80% of all home loans done in the United States are conventional loans. But that's just because they're common. So it doesn't mean that they're the best fit for everyone. So today we're going to explore the key differences between FHA loans and conventional mortgages and why it matters to you as a home buyer. So when you search for a home loan information or interest rates, you're typically seeing details that apply to conventional loans. These loans are so prevalent that they're often the default option offered by lenders, unless you specifically ask for something else. But here's the catch. Conventional loans come with some of the strictest lending standards, and not everyone qualifies for them. So that's where FHA loans come in. FHA loans are backed by the Federal Housing Administration with the goal of making home ownership a little bit more accessible for people. The minimum credit score required for an FHA loan is 500, but keep in mind that lenders often set their own minimums, which can be even higher. Even so, FHA loans typically have lower credit score requirements and allow for a higher debt-to-income ratio compared to conventional loans. One of the biggest differences between FHA and conventional loans is the down payment. If your credit score is between 500 and 579, FHA requires at least 10% down. But with a score of 580 or higher, you can put down as little as 3.5%. That's a pretty good deal, especially when you consider the higher debt-to-income ratio allowance. Now, the flip side of that deal is mortgage insurance. FHA loans require mortgage insurance premiums, MIP for short, for the life of the loan if your down payment is less than 10%. That means you'll be paying MIP until you refinance, sell, or pay off your mortgage. On the other hand, with conventional loans, if you put down less than 20%, you'll have to pay private mortgage insurance, PMI. I don't know why they call it different, but only until you've built up 20% equity in your home. Another key difference is the property standards. FHA loans require a special appraisal to ensure the home meets their safety and soundness criteria. This is in addition to the standard appraisal that all loans require. If the property doesn't meet FHA standards, it could complicate the home buying process, especially in a competitive market. FHA loans also come in different flavors. The most common is the 203B loan, but there's also the 203K loan, which allows you to finance home repairs and renovations into the mortgage. There are even FHA loans for manufactured homes and energy efficient upgrades. So now let's switch gears and talk about conventional loans. These are the standard mortgages that most people think of. For a conventional loan, you'll generally need a credit score of at least 620. Higher scores like 740 or above could get you better interest rates and terms. Conventional loans also have a stricter debt-to-income ratio requirement, usually capped at 36%, though exceptions can be made. One thing that's often misunderstood is the down payment requirement. You don't need 20% down for a conventional loan. In fact, you can put as little as 3%. However, putting less than 20% down means you'll need to pay PMI until you reach that 20% equity mark. So, are all mortgages the same? Not quite. FHA and conventional loans each have their own advantages and drawbacks depending on your financial situation and home ownership goals. The key takeaway, though, is to explore all options and choose the one that best fits you. And remember, the mortgage you start with doesn't have to be your mortgage forever, for life. Refinancing is always an option down the road. Hey, thanks for watching again. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more tips on mortgages, home buying, and everything in between. And maybe share it with a friend that might want the same information. Hope to see you soon in the next video. Take care.